The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Still in sunny Florida here at the TFNN home office, and it's great to be here. What a great bunch of guys. Great tech support here. Al in the tech room just running the show every day. This is an awesome operation down here, and glad to be part of it. Thanks for bearing with me yesterday. We had a little bit of a technical issue where I was at in Florida trying to get the show off, but we're back. So here we go. So let's talk about what's going on today. We've got a couple of reports coming out at 8:30. GDP, a couple of little home sales, a couple of other little things that are going to have a little impact on what's going on. But we've got the markets down. We're going to talk about that initially with the S&Ps edging off here. Here's our scanner. Here's what's happened with the breadth on the ultra short term. I'm going to blow this up. I hope you guys are seeing this. And we're taking a look at some of the hints of crossing into negative territory in the short term around the 22nd of March. And we kind of started trailing off here. So again, not a major pullback yet. And looking at the breadth situation, why are these crossovers so powerful? We've got the internals on a short-term basis as of yesterday's close. A lot of stocks haven't opened today, obviously, yet. 56%, almost 57% of the stocks in the S&P on a short-term basis were net profile breadth aggregation of all those internals, net breadth negative. So we're going to take a look at some of the things we talked about on Tuesday. Last show that I did. We're going to take a look at our daily here, and we're going to, wow, on the daily we've still got a sea of green. It's like St. Patrick's Day still. But again, these are intermediate and long-term weekly and daily as we look at these ETFs. There's a weekly, there's a daily, here's the 4-hour. And we took a look and kind of focused on specifically the staples, the XLP, and here we are at the 4 hours, third from the last here. We're going to take a look at the financials also. This is, again, looking at the breadths here. Staples, we're going to drill into that. We're noticing, again, some of the stocks that we talked about. Let's just pick one out. Hershey. We had a pretty good sell-off the other day in that after we had talked about it. We're going to revisit a couple of those XLP stocks, and we're going to look at the XLP in general and find out where the ETF is, looking at the charts. But let's get right into the S&Ps. Before we look at the S&Ps, and here's our, again, looking at the profiles, and again, we have that hint of a new profile attempting to appear yesterday during the day. I was obviously watching this. And then you've got a new stake in the ground as far as a new profile today. We've already explored the entire fair auction and are trading below at 221 or 2021 is those unfair lows, and we're going to cruise back immediately to the 10-year. All right. So as we look at the 10-year, before we get into the S&Ps and finish that talk, this is something I've been a little hesitant on, to go short this against that 129.02 unfair lows in the weekly. Kind of waiting to see if we get a weekly close back up above 129.02. I'm a little bit more bullish than bearish on notes. That means interest rates are obviously in an inverse relationship to the action on these things. But what we want to do is we want to, be aware. Obviously, we've got some decent news coming out from a decent impacting news at 8:30, and then we've got some numbers, I think, at 10, home sales. So that's obviously going to be interest rate volatility measures as we look at those things and as they open. A weekly close we talked about. We had one last week and we were drifting lower. This is our weekly, again, back above 129. I told you I was waiting to see if we could get back above 129.02 to start looking at this from the long side. Again, I think the notes and bonds are just basically going to churn around here. I don't see any big sell-offs going on here either way, but you've got I think it's the St. Louis Fed chairman that's coming out with supposedly some more hawkish comments, and that is not jiving with what Yellen was talking about the other day. So a little bit of a tug of war here, and that usually means we're probably going to be range bound. So as far as fundamental comments go, but as we take that into consideration, we're going to go back to the S&Ps, and we're going to also take a look at the currencies really quick. We're going to take a look at the dollar before we talk about the S&Ps. I'm holding you in suspense here. And let's take a look at the dollar. Let me go back to my correct screen here. And there's that June contract on the dollar. Now, we talked about, obviously kind of getting below 97, 74, 75 and having a chance to retrace. We closed below, went back and retraced, and then we just basically fell out of bed here. But again, we always want the market to come to us. And what I wanted to point out here on the intermediate, which is where a lot of our automated systems are based around, intermediate inflection points, these unfair highs and unfair lows. Here's the dollar situation. We've kind of raced back up into it. We kissed it yesterday and came off, but again, we're just kind of compressing and driving into that unfair low. I'm not so sure we're going to be looking at this as a short now. This is something where I think we could actually retrace back up into that 97 and some change, which jives pretty much with the unfair highs on the daily and the unfair lows on the weekly. So again, I'm not looking at this particular level as, let's back the truck up and short the dollar. That being said, markets like lower rates in general. They have traditionally liked a stronger dollar. So as we go back into the S&Ps, now we can kind of talk about it. Obviously, the things going on in Brussels have, been awful to say the least, and it's rattling the markets a little bit of a delayed reaction. But as we look at this 2046, now the reason we've been talking about 2046 on the S&Ps as the target above 1971 and looking at the market as a little heavy the other day is we've got a relatively wide profile with this POC here at around 2046. And we talked about, let's take a look at this and let's try to base some trades. I mean, we've reached a high of 2047. That's kind of in the neighborhood, I would say. And we talked about being able to lean against that fence on the short side and place stops above for a decent risk reward. At the same time, we've been having some of the breadth calculations roll over ahead of time. There's the 22nd. And some of those short terms, here's the 23rd, obviously here's the 24th. But we started noticing some kind of change in tone in the breadth calculations on a short term. And I know we are breadth positive on the weekly and daily. But again, you've got to always factor in those index inflection points, especially when you get to a wide profile, and pay attention to those POCs. So breadth rolling over at the POC. We're going to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show, and showing the breadth calculations right now on our 60-minute on the S&Ps. There's that 20-second area where we started to break down a little bit again. Talked about the other day when Joey was on, market, it's a little bit heavy. We've rallied a little bit past when we were talking about that, obviously. But again, the good news is we try to block out one side of the marketplace. So looking a little heavy doesn't mean pile into shorts. You want to wait for some confirmations, and the way those confirmations work is we were talking about getting below 2031.5. If you remember, why is that the case? We're going to go into, and we're going to answer that question you had in a second, Russ. Let's see here. So we're going to take a look at the 240s and just, being able to get below this kind of regulator of the trade up, the 240s, there's that 1971 general area. This is the June contract, and that's getting above that weekly, coming back and testing it again, if you remember those inflection points on the long-term weekly. So when we, breadth's doing what it's doing, we've got to pay attention to that. And then we're looking, hey, let's looking a little heavy. We want to wait for some confirmations on the breadth. That 20-second, 60-minute breadth crossed over, and then we got below our targets on the 240. We started having the breakdown on that regulation of the trade up. All right, and that's why it's very, very important to look at these. And, there's those bounces off the bottom of the 240. But as we look at these things, we want to get some, as we look at these things, we want to get confirmations. We don't want to be the guy trying to pick the high print or the low print on these moves. That's a dangerous game. You guys know that. We talk about it all the time. So, again, trying to make this as boring as possible is always good when it comes to trading. So as we look at 2031.5 and the breakdown, you've had some chances to look at this, I think, at that stage with some of the breadth changes for the first time, looking at the possibility of pressing a short. Now, what we talked about earlier, and again, we always talk about when it comes to trading indices and any instrument for that matter, we want to let the market come to us. And when we're in no man's land and we feel like we don't have any leverage being in no man's land with no inflection points hanging around, we're just supposed to sit on our hands, all right? You don't have to be in the market all the time. We talked about that religiously for the last year and a half. And whenever I've tried to force a trade, it always ends up ugly. So let me get a little dark and gray this morning. So as we look at 2046, we talked about the other day, in fact, Tuesday or last week, in fact, when we have a relatively wide profile, we've got to pay attention, especially on the long term on these weekly setups. We've got to pay attention to these POCs. So the inflection points on the daily are important, but these weekly inflection points usually override what's going on in the intermediate. And when we have a wide profile relative to historic looks, and this profile is from 1971 to 2095, I mean, we've got to, let me do the math there. It's 124-point fair auction on our weekly. That's a pretty wide profile. So we've got to look at the POCs, and these POCs being these blue lines, are these blue lines are the mode of the balanced area. So what does that mean? It's not the midpoint of these things. You'll never see these things really set up on the midpoint of these balanced areas. This is the most well-traveled area when it comes to volume within the balanced area that we're outputting. So that's usually the top of the hill. You know, you roll down one side, you roll down the other. When you have a wide profile, I kind of look at these as kind of the very tall mountain, if you will. So again, these are great inflection points on wide profiles to always take into consideration. And when we had this 2046 happen, as you can see, last week we had a high of 2043 rounded off, and this week we've had a high of 2047.5. The long-term profiles, sometimes they're to the tick, but again, you got to give yourself a little noise area to play around with these things. If you're looking for more of a longer-term move, then there's a couple of ways to play it. And the simple ways are put your stop in, give it a little bit of room. The other way is, if you like the possibility of the move happening in a larger way, seemingly like we've kind of had now, what are we, about 30 points off, 32, 33 points off that POC. We always talk about, you know, a strategy can be, if you're looking for a larger move, just get short the S&Ps and buy some in-the-money calls. I mean, the volatility with the market climbing has kind of evaporated some of the volatility component in these options. So when you buy in-the-money calls against short futures, take a look and just put those on your board, put it on your radar screen for a while, and see how these things act, so you can kind of understand relative to, you know, how far in the money you're buying these calls against these short futures. If you buy money outside of these short futures above, then you're obviously, you know, giving yourself a lot more room on the downside immediately if we have a pullback. But again, you're paying more for the insurance, so to speak, because the market can go against you, and those calls may actually sit still and not protect you that well. So I'm kind of a big fan of buying in-the-money calls if I'm looking for a move. And I wasn't looking for a drastic move down here. But in that instance, you want to be looking at, you know, how do I pay the least amount of money for the insurance that I'm buying against a possible move that I'm thinking is going to happen. So again, you know, we've pulled back off of these POCs. The breadth has changed on the short term. What I want to do now is, as we've kind of reached some of these targets at 2021, right here, in a traditional sense, with the breadth still positive on the long-term and intermediate term, we're supposed to be machine-like buying this, but I want to wait this morning and see how the market opens and let these breadths kind of recalculate themselves. Remember, we're doing pre-market calculations on these particular aggregated net profile breadth calculations. So when I go in here, considering that all the why did we switch back to daily? Considering that all the instruments in the S&P haven't opened yet, and this is another thing we talked about the other day when Tom and I were on the show, we really are, and we have been, in an overextended mode here lately on the daily. So when the 60-minute crossed over the other day, you know, we had, I'm sorry, that's the wrong breadth calculation. Let me go back to the S&Ps. When we had a pretty good overextended situation on the S&Ps, 70 against 4, and on the same day, that's the 21st when we had that overextension. And then on the 60s when we started rolling over a little bit on the 22nd, still being within that profile. This is our daily, and at the same time, the next day having that new profile attempting to appear. That was, getting below 2031. That was a real big event for me. But as we look at this, do we buy this inflection point here, and is the market still in an uptrend? We're going to talk about that when we come back. And again, we're going to, in my opinion, we're going to want the market to open to see how these internals react. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Finishing up about the S&Ps and talking about that POC and some of the breadth calculations, this thing in Brussels obviously entered my mind in the middle of all this equation that we just spoke of. Isn't it amazing how sometimes events happen like that while we're at technical areas, levels to be aware of those inflection points. And when I say inflection points, levels, the POC, the unfair high, the unfair low, and there's a lot, sometimes to trying to get a global idea of how you attack these things. And a lot of the times on the show, we will just kind of surf around the globe. I'm looking at the Shanghai right now. We had reached an inflection point on the Shanghai in a downtrend. And again, I'm going to kind of just revisit this. You back up for a second. Remember, we broke out in July 2014 above profiles, and we used those weeklies and dailies to regulate this trade up, and then we started having the breakdown and retest. All right, now we've had some opportunities to go long here this Shanghai, and we obviously have on an intermediate scale, especially looking at our breadth. I'm going to pull this back up. Sometimes when you're in the middle of a battle, you kind of lose sight for the forest from the trees here, and I want to just kind of revisit this really quick. Shanghai is right here, so I want to go to my weekly breadth and just remember that, you know, there have been times, I'm going to take out our middle ground here, there have been times to go long, and there's that July 14, there's the internals cooperating, there's the sell-off again, there's that chance to go long again back in October 2015, and then the door shut. All right, so I'm not looking at this, you know, we're at an inflection point. The market has come to us on the Shanghai. We're starting to show a glint of getting positive here, but again, you know, I'm not really wanting to look at that as a very positive scene until we eclipse some longer term inflection points, just like we were looking at on the chart right then. So all this being said, you know, when we look at the S&Ps, we want to try to get an idea globally, you know, from a relative stance, if there's some other things lining up that hopefully can slow our trading down to wait and have these things, you know, happen. So when I say have these things happen, so the Shanghai was at an inflection point. The market has generally liked, you know, the Chinese market going up and seemingly has disconnected lately, without question. But you know, the Shanghai going down, the market probably at best is going to go sideways. Shanghai goes up, U.S. market seemingly has gone up. So right now, on the Shanghai, you've got a new profile attempting to appear on the intermediate. You have not cleared that 3056 area on the weekly. You've also got the U.S. stock market hitting that POC. You got the Belgian event, and you have some other information. You've got the currency situation going on, the note situation going on. So, you know, waiting for these markets to come to you into these big impacting inflection points and not really being in the market all the time is something I've been a big fan of. So all things considered, you know, what do we do with the S&Ps now? I think, again, we're kind of in a wait and see. We've had a decent little sell-off here based on some of the things that we've talked about. And we've hit some targets on the daily. I mean, we have to pay attention to this, no matter what feelings and change of tone fundamentally has happened out there. You know, we're at an unfair low on the daily. I'm going to blow it up. Our breadths are still positive on our weekly and daily. We want to wait till the market opens to see kind of how that acts. But by definition, on the long term, we're within a balanced area. On the intermediate, we've kind of looked at that as, you know, we're sitting at the bottom of a profile in a trend up on the intermediate. So right now, I don't think we have a lot of leverage here. We've met a target, big wide profile POC on the upside, and 2018, we're going to have to or 2021, we're going to have to wait and see how the market opens. So, you know, regardless of whether you are completely focused on the S&Ps or not, there are other opportunities out there that I think you can actually gain leverage by drilling into some of the internals and some of the sectors that have kind of raised their hand up and shown themselves. So we kind of specifically talked about Hershey the other day, last Tuesday, and you know, we talked about a trading opportunity. This particular stock getting down below profiles, going back and retesting it. This is one that worked out relatively well. We had a decent little sell-off here. I don't think the party's over on the short side for this. Your targets ultimately are, in my opinion, going to be down in the 85, 83 area. And why did we pick this out? Because we looked at the Staples ETF. We started showing some changes there. Again, there's been some easier stocks to short. But again, this thing showed itself on Tuesday, open up, go back and retest, and then those are the powerful trades. I don't see any reasons to take the trade off right now. So here's the 240s. We could get a little bit of a rally back, but again, I think the staples are still a sector where you can get a little leverage there. If we go into the ETF section, and we've got to reference some notes here really quick. Nothing really happening on the GDP. Yeah, not even worth mentioning. But if we go back to the ETF sector here, we look at the 4-hour, 1-hour daily. Something else that we've kind of been staying away from, the financials. Remember, the financials need a widening yield curve. We talk about that all the time. And if we look at the XLF in general, just take a look at it. All things considered, you know, we normally look at this as closing above and coming back and retesting. I'm not a big fan of the market doing any big spikes right now, and I think, without question, this morning we're trading below that profile. We're trading 22.34, 22.31. That's a real print. Okay, so again, you know, I'm not a fan of buying the financials. Joey and I have talked about it. You know, this is very relevant to what's going on in the bond note world, and as we look at this. Again, normally it looks like, hey, you know, got a pretty wide profile closing above, go back and retest. I think we're going to probably dive back into this particular profile. And what does that mean? That means that drilling down into the XLF, you want to try to find the laggards. And we've had a decent little market pullback here, but, you know, nothing to write home about. Some of the ones that we talked about religiously, the Goldman Sachs of the world, I think we've had the Morgan Stanleys of the world on our radar screen. Yeah, there we go. So let's, and the reason we're looking at these is because they're the weaker stocks in the sector that needs a widening yield curve, and it's not a pretty situation for these stocks. So again, Goldman Sachs still, I mean, we've had some volatility. We've come up into this inflection point. We're kind of crowding it, but you know, market is, excuse me, Al, the market has rallied pretty significantly the past couple of weeks. This thing can't get out of its own way, and you've got this inflection point with a little bit of noise here, 155.02. Nobody wants to buy this. It's not squeezing anyone. And you've also got a little bit of a lid here at 156.13 on Goldman Sachs. The good news is on this one, I think you've got a high risk reward, and we're going to talk about Morgan Stanley when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And we were talking about Goldman Sachs. We also had put Morgan Stanley on the radar screen here. And as we look at this, you know, we always look for stocks in a downtrend that are underperforming. When we look for stocks in a downtrend in a sector that had been underperforming, but then, you know, we want to take a look at some of the stocks that are the weak stocks in a sector that we're not feeling that rosy about. Morgan Stanley, this is our weekly view on Morgan Stanley. We talked about this 26.93, let's just call it 27. As the financials had risen a little bit, this one's kind of showing its hand. I don't want to be bought. So these are the ones that we look at when we have pullbacks. We can hopefully, you know, just kind of really leverage right against those unfair highs on the weekly. That has been shown to, you know, be a very nice situation, letting the market come to you type thing. And be able to hopefully, you know, wring some points out of it. So this morning we're trading 25.05. We're down again. Again, the market's down. You want to find stocks that are, again, some of these high flyers, obviously there's some great turnaround stories to get on the other side of them. But, you know, the boring game and the decent game to play sometimes is to find the weak stocks ahead of time and to be able to just lean on them, put your stops in. Market turns around if that's what you're considering happening. These are the ones that are, again, just simple to be picked out right within the scanner. We're going to take a look at a couple other ones I was looking at. And again, why am I picking these out? I'm looking at ones in the financial sector just to kind of keep playing the game the same way. Yeah, I'm just kind of, let's see, bottom, Goldman Sachs, there it is, red. Let's look at Boston Properties, BXP. And again, this is a stock that's not the weakest thing in the world, but I want to take a look at it. All right, so again, I don't, you know, you've got better opportunities than this one right ahead. It said weekly bottom in green or weekly top in green. That's one you got way better situations than that one. So that's a look at one that didn't look exactly rosy on the charts there. So we're going to take a look at, let's see, we looked at the ICE a lot. We're going to take a look at Plum Creek Timber. And there we go, PCL. Let's just take a look at this one. PCL. Well, Not coming up. Don't know what's going on there. Anyway, we're going to take a look at another stock. We're going to take a look at the ICE. Did I lose connection? Here we go. This is one, again, you know, we always talk about, you know, how can you have a fence to lean on? What can you have in front of you to orient stops around and play defense? The only thing you've got on this one, it's a very expensive stock. The only thing you have here is the 240s, and let's see what's happening here this morning. Do we have a print? We don't have a print. So again, you're finding weak stocks on the weekly and daily, and you've got something to lean on the 240s. And you got a nice little downdrift here that can happen if the market has a decent pullback here. How do I add stocks to my save scanner list? Here we go. So you come in, to answer your question about the scanner, I think you can go in here and edit lists. So for instance, I've got John Test there. I'm pretty sure you can add more instruments to a current list by doing that. We've got a really cool version of this coming out. I want to show you this. Let me see if I can get it started here. Get all this out of the way. Just want to throw this on your, let's see. Here we go. Where's my folder? Okay, we're going to hit crude oil. I'm going to come back to that on the break. I'll figure that out. I wanted to show you a couple of new features that we've got in. Let's see. Let's hit crude oil really quick and gold. Paul, I don't know if that answers your question. I hope it does. Crude oil, we have gotten back down below. This is the May contract. Come on. Okay, here we go. So lows right now, 38. I cannot. You get older, you can't see. How about that? Unfair lows at 39.29. So we're drifting below there. If you'll remember, I've kind of been a big fan of taking everything off at these unfair highs on the weekly and just waiting and seeing. I think, you know, crude oil definitely, you have to kind of back up and not get so excited. I mean, crude oil's been in a downtrend. It's going back into the top of the profile on the weekly. That was, you know, wait and see if we get a weekly close above after we take a lot of weight off at the top of that profile. And thank goodness that's been the case. So, you know, I think crude oil's going to kind of be range bound here. I'm not seeing a lot of instances where, you know, we could really climb a lot higher out there when I look at all the technicals. So again, you know, what's the play on crude oil right now? You know, it's a waiting game right now. We've got to see if we get a weekly close below this 39.29 area right now, and then I think we could probably look at that as shorting against that particular inflection point with stops above. All right, and we have about 2 minutes left here. I should be able to find this very easily. God, I want to show you this. Well, I'll look harder on the break. Let's take a look at gold here. So, you know, gold is something we talked about not buying. These unfair lows at 1244.5. Just started crowding it, didn't like the action. Gold usually makes a wrong move before it makes a right move again. So, again, you're going to have kind of washouts like this, like you had yesterday. And hitting 1215, there's really nothing to, you know, to really write home about as far as things to inflection points to buy this on right now. Here's the 240s, and right now you do have a new profile that will probably output on the short term in the next 4 hours, 3 to 4 hours. That'll give you something to lean against. But again, I think I'd rather have some more daily information appear on gold. I think the trade is off right now. I'm not a big fan of shorting this. So again, it's something that we're paying attention to right now. Here's the long-term, that 1964 held this week. We reached a high of, or excuse me, 1264 held, 1263 held. We reached a high of 1261 rounded off. And then we're just kind of drifting here. I'm not saying the long trade's over. We just want to kind of let the market come to us, get some more information. And on the daily, I think that's just going to be in order to try to wait and see if that can happen. All right. So as we go to break, I promise we'll have a glimpse at some new features in the scanner when we come back, guys. And we're going to take a look at Novi beans here, sitting right at that 915 area. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Finally found it. My big fat fingers found this file finally. Just taking a look at the scanner, showing this in the den right now. We're putting a lot more information on the Heath grid. This is a beta. It'll be in your hands next week. And you know, you can basically look at all, and I was tired of going back to the futures section or some other sections to try to get this information. So you'll have a chart, the profiles, where it is relative, the landscape view. Also, when you go in here and you know, pull up anything in any part of the scanner, it's going to give you a chance to save your settings, finally. So hopefully you guys will like that. Going back into our normal scanner, and again, on a day like today, We're pulling back pre-market pretty significantly. I think we've, again, reached our targets at 2046 on the S&Ps. We're looking at the XLF right now. But as we allow these internals to open, and let me go back to our S&P chart here really quick. As we allow these internals to open, remember, on days like today, some of these stocks that we've been talking about that have been showing their bearish connotations, on a day like today, if we open down on the S&Ps, a lot of these internals open, you can go into stocks or go into a section like this, go into breakouts, and you'll start seeing candidates that are showing themselves as, wanting to buck the trend. And again, we could have a little more downside, but, this is kind of, some of these are based on yesterday's close, so we've got to wait for them to open. But stocks like, let's just pick one out. Let's take a look at Johnson & Johnson here. So again, Johnson & Johnson, kind of one of those anti-stocks here, daily kind of breaking out yesterday as the market turned. Procter & Gamble, I would bet my... God, why does that happen? Procter & Gamble, here we go. Let's just see how this is setting up. Pre-market, oh wow, trading down, 82.50. So again, some of these stocks that you're going to find in the scanner, that was weird. On the breakout section, let's look at AAP. We can kind of reference that really quick. What happened? See, there's another breakout on the daily. You have to wait and see how these stocks open. If the market continues to drift off and opens down, and the pressures on the downside, a lot of these stocks may just come back and retest where they broke out from. We always look for those powerful trades when it comes to breakout, go back and retest where it broke out. Those are really, really good trades to get into sometimes. And these put them right on your radar screen. Let's take a look at, let's see if Costco's in that. Costco didn't have a bad day yesterday, and we're just kind of hovering there. Again, the targets, not a lot of leverage here, 157.29 on the upside. And let's see, place stops. Not a bad risk reward, but we'll have to see how it opens. And again, why are these in the breakout section? It's just putting ones on weekly and ones on daily right on your radar screen that have cleared the noise area. We're kind of opting out on tops in this case because those are stocks that haven't cleared the noise area. So Waste Management, WM, let's take a look at that one. Wow. Strong stocks in a weak market, huh? Wow. And stocks that just broke out recently. EMC Corp. This one should be interesting. Wow. Got some decent upside on that one. Guys, you've been great. Stay tuned for Larry. He's next. All the hosts on TFNN. We'll be back Monday. Have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.